Pardon me. Yo, it's a backtesting session, 23rd of April, 2024. Come on, niggas, no, listen. Hey, hey. Yo, boy, obviously, I was doing my own little backtesting here and, took a couple losses, learned from my mistakes, you feel me? I was a bit rusty in the morning, but yeah, back on top form, you feel me? Back on top form. So, well, that's the reason why I backtest every single morning. I'm not at that level where I can just hop on a chart live first, like without, doing anything prior, preparing myself. I'm not on that level yet, but that's the level I strive to be though. But yeah, I'm not on that yet. I'm not on that level. I need to learn from every time I do that, I lose and lose and lose. And the old losses in which, it's just me just breaking rules. That's it. So I made it a part of my routine just to, just trade in the morning from 9:30 to 1:30. I mean 9:30 to 1 p.m. So yeah, so just broke out of a higher time frame range. Last down candle there. Let's see, not much. Okay, cool. Pay attention to the right side, right? Um, okay. Okie doke. Let's see what we got. Oh shit, the 5 seconds. Okay, we violate anyway. Cool. Um, Now we're in a ranging environment. You look for a candlestick. In fact, first you want to see a valid low taken. So that was that right there. You take another one here. Now you want to see a candlestick flip. Right now we are currently downtrending. So the side of the market you're on is shorts until you see a shift in the trend. And technically, what is that? That is a bullish flip, a body closure above a up candle. So we took a low and we pay attention to the right side, right? This is the current trend until you see a shift. What's this like on a 1 minute? You see, okay, cool, that's fine. I only see a pullback. So a pullback would be a body closure below that low there. But that would eventually validate the zone. So unless we get another bullish flip, then I'll take that because that's a wick on a higher time frame. So right now the zone that we're looking at is see a body closure below a valid low. We're in a higher time frame downtrend. Now you see a 4 candle dump, you know that you're not participating in that first confirmation. You're gonna wait for the second confirmation. Wait for people to chase buys and wait for both sides to be liquidated. So this is also the importance of not paying attention to the zones to the left so much as much to your right. Pay more attention to the right side than the left side. So first people to counter trend usually get liquidated. I want to see a body closure there. Once I see that, I'll look for a move back up if it shows it, if price shows it to me. Okay, and that S&D responsible is pretty far up, so I don't think that. Well, yeah, don't think. Just follow what price does. Right now, this is our zone. All this shit. Oh, no closure. So we're currently downtrending. Let me see what the 1 minute looks like. So we're now going to start accumulating below this higher time frame low here. It's the major level. But that's, you know, on a higher time frame. So that's the type of order flow that we're anticipating now. Now I want to see my narrative confirmation. The S&D responsible is right down here. So let's see what price does. Okay. Oops. So we broke that. This is the down move we look at now. Okay, cool. I want to see the next Vic. Okay, cool, nice.
Order filled. Order filled.
That's fucking simple as that. Look, check it. So we have what did I see? You see this down move, you see a pullback, you see a break below, you see the S&D responsible for that pullback down. And you see when I tell you guys to, let me pull it up. So now where is it? Wait for the next candle to pull back into the wick. So that pullback into the wick is also, there's an S&D responsible for that pullback on a 5 second. And it's that right there. I'll put it side by side so you can see. You see it right there? I'll just do that. You see that? So yeah. Now we're in a downtrend. So we know that we're not looking for long confirmations in a downtrend. If you are going to, then you will wait for a valid low to be taken first. And then you will find the manipulation move below it and then move up with it. But if you're looking for longs in this environment here, you're not choosing a demand zone from here to trade up. You're not doing that, G. You're not doing that. You wait for the low to be taken, a valid low to be taken first, and then move up with it. So right now, let's zoom out. Okay, so current trend is going up. Now look, check it. Hold on. Look, check the environment that we're in right now. I want to pay attention to this. So if price is in a high time frame downtrend, as you can see, we have a body closure below here. This is the protected high. This is the downtrend, but on the high time frame. So if price is in a high time frame downtrend and closes above the last down candle is, see that there, right there. Then price is currently uptrending in a higher time frame range. You see price uptrending in a higher time frame range. In a higher time frame range. What is that? What's in? What I mean by in it? This is the higher time frame range. Don't be mistaken. This is the previous range. So let me go back. Wait for price to trade below a valid low. If price breaks below a valid low, then price is currently accumulating. Wait for a bullish candlestick flip within the 30, 50, 70. Now I need to update this because clearly there's no 30, 50, 70 here. But what you would do is wait for a bullish flip, tap back in, with confirmation, move back up with it. That's what you would do. So this low is what I'm waiting for. As you guys can see, boom, 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 boom. Let's say, for example, we was looking for longs, yeah, because we're currently uptrending. So of course, you want to be on the side of the current trend when you're executing. You want to be on the side of the current trend. Now, in these type of conditions here, if you were to long here, there was no confirmation shown to you anyway. But you see that this zone failed, and now we're in a downtrend, right? Until price creates more down candles. We see that there, we see that get violated, and now we see that, and we take it right there. What does price do? Once we take it, it gives us the opportunity, in fact, yep, 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 yep. Look at this. He had no closure. This is the zone. I mean, this is the candle that I'm talking about. Right there. See a bullish flip. Let me show you the S&D responsible. Wow, this happens so quick. So quick. Oops. See that? The break. So this is the S&D responsible. This up move, or if you want, you can consider this whole up move here, was responsible for this break below. That's the pullback into the wick. And this down move was responsible for breaking that. You see us tap back in, and you see an immediate shift out. So let's see, you got in right there. Now I'll put my stop here. But as soon, this gave you way more. So look, from 91 to 95 or 96, my bad. You guys already see my ATM strategy. As soon as it hits 5 points, it automatically moves my stop to 2 point profit. And it gave you and some. So wait for a valid low first to be broken when you see that we're in a high time frame downtrend. And it's the same when you're in a range. You want to see a low taken first. Then you want to see a bullish flip, a pullback into that flip. and then you but yeah, I need to change that. So I mentioned that you have to be in the 30, 50, 70. Well, really and truly? Oh yeah, this is the current range. It is true. In fact, let me see. Were we in the 30, 50, 70 here? Boom, 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 boom. I mean, I guess no, we were not in it. That I guess you could use this zone here. So I guess that is the 30 on the 5 second time frame. That's a whole zone. Hold on. An unmitigated zone just below it. This is what we were bouncing on multiple times. And you will notice that when we liquidate, I talk about it a lot. Well, I haven't talked about it with you guys, but on my live streams I did. These zones that mitigate multiple times, when we break below it, you usually see a move back in to the range that broke the zone right here. So this is this is another level of anticipation that I look for. Zones that have been mitigated multiple times. Usually it weakens the zone, and when we break it, we move back inside the range that broke the zone. So what are we doing now? Dumping. So we broke a valid low. We're in a higher time frame downtrend. So what you're looking for is a bullish flip. Now in this situation here, as you guys can see consecutive down candles. So you know that toilet paper people, if they are the first people to get in that first counter trend move, you don't want to be part of them, man. You don't want to chase. So you wait for the market to flush, the first people to buy it, and you wait for the market to so when so I forgot, why am I even explaining it, bro? It's right here, G. Where is it? If price creates a four candle dump and a valid low, then wait for the violation of the valid low. Wait for the manipulation below the valid low. There you go. And here I am. I was about to start some drawn out explanation. But yeah, I'm still finding like I'm trying to develop a language in which to explain how I trade. And I guess that did help. So you also see the four candle pump here on the 1 minute. So you know that you're waiting for this. Oof, oof. Yeah, my heart, that man's pretty stiff still. Oh Lord, trust me, when you're sitting down on the screen all day, yo, yeah, man, I can get pretty stiff. Oof. Oh. Now there are cases in which the people that chase buys, they win. And what do I mean by the winning? Like, there's cases where it doesn't come back to liquidate. There are cases like that. So in this case, you still want to, so you want to wait for a valid high to be broken. If we wait for, if a valid high is broken, then the whole anticipation, the whole narrative of toilet paper people is out the window, and you trade price like a new, right? So it's a new market condition. So you just keep it stepping. But this is how you anticipate, so that you're not um, you only participate in high probability moves. So that's your rule of engagement right there. It usually looks like a V-shaped recovery when you see toilet paper people winning, people that chase. When they win, it usually looks like a V shape all the time. That's something that you guys can see for yourself in back testing. But you're not invalidating the idea until a valid high is broken. Oh Lord. And once a valid high is broken, you guys can clearly see that we're uptrending, right? Then you're on the side of the current trend. You always trade on the right side. So when I tell you guys to pay attention to one side of the market, there's two ways in which I mean that. The first way is when you're learning. So it's only engaging in longs, right? The second way now is only engaging in the direction of the current trend. So you're long and short, but your analysis is only on one side. You're not counter trending. You can counter trend, but I'll be real, it's better for you to just trade with the current trend. Way better for you. That's what I do. The current trend, the right side, the current leg. So we see a body closure there. That invalidates the whole idea of toilet paper people, right? So if you know, check out, you're most likely going to see a closure above here. But for right now, you have this. Look at me being impulsive. Okay, cool, check it. When we're in a downtrend, or we're in a high time frame downtrend, you want to wait for a valid low to be taken first, then a bullish flip. I think I just explained that on my last trade, wherever it was. I don't know where it was. Hold on, where was it? Yeah, over here. Wait for a body closure below a valid low, and then you'll take your move up in it. You wait, you wait for a valid low, and then wait for your confirmation. Now we have a zone just below it right here. So this is where the move is, a high probability. So I'd much rather take my setup right there. But chill. Right now we're currently downtrending. The last up candle is right there. So this is what I mean about you can counter trend as well, but you must counter trend from highly probable areas. You must see a bullish flip here too as your indication that, okay, we're uptrending now, and you want to see an uptrend from this area. So now you want to see a bullish flip for that confirmation that, okay, price does want to. But look, we have a 4 candle dump. So even if you get that bullish flip, you want to get in on that second confirmation. And that there, my friend, is how you avoid a premature counter trend. Now you want to see these people get taken out. A body closure below here. And we're gonna do that. No, that, yeah. You want to see them man get taken out. Let me zoom out a bit. The most probable move is literally just below this low. That's the most probable move. But you can still, if price will show you, still keep track of price because it will show you that if it wants to. If it wants to short from these areas, then it will. If it wants to long below this low, but there's no, yeah, there's a high time frame zone right here. Although it's unlikely. Yeah. Now you see a whole dump here. You want to wait for the first people to counter trend to get stopped out. And one thing I would like about the 15-second is that this is super obvious. Super, super obvious when you see a dump. On the 1 minute, you can see three candles, but then you can still get chipped out. But on the 15-second, man. So if you guys are learning on the 1 minute and you already feel, if you're learning so you're executing on the 1 minute and you're learning on the 15 minute, right? And your analysis will look like this. When you already believe that, yeah, you mastered the concepts and everything, then get onto the 5 minute. So the 5 minute is the equivalent of trading the 15 seconds. So here you would have on this 1 minute chart on the left side here, you would have the 15 minute. On the right side, you'd have the 5 minute. And then your execution chart, you'd have the 1 minute. And that is literally, the three time frames that you would analyze the same way I'm analyzing 1 minute, 15, and 5. So you got that. Oh shit. Oh, I missed it. I was talking too much. Lol. Anyway, it's cool though. Um, mm, I don't know. My analysis is probably shit. I probably didn't miss anything. I don't even know what's going on right now. I'm not even gonna lie to you. So let me get back to. So we just took out a valid low. Now we have toilet paper. People come back in. They get stopped out. We see a bullish flip. Oh shit. Okay, I didn't miss anything. Yeah. Okay, cool. S&D responsible is literally just right above it. Do we break it?
Order filled. Order filled.
Shit. So look at this. Uh, this was the S&D responsible for this break here. So on the 15-second, I saw my wick confirmation, uh, the narrative confirmation that showed me that okay, cool, we have a weak high. You guys saw where I stopped out. Now I can't lie, I only took my profit here because price immediately went to 5 points, right? So that's why I just closed. But as you can see, it's still going way further. I don't have to close at 5, but I just use it. I use 5 as a measurable goal, as a discipline. But these moves here can give you way more. So I saw the break. You see the body closure right there. I entered at the pullback of the S&D responsible. My stop was somewhere around here, the body over here, and bow. You feel me? And look, bro, I'm on 2x speed, like 2x. So it's literally uh 2 seconds, every 2 seconds. So 1 second in real time is 2 seconds in back testing. I'm already halfway into my daily goal for $600. So look, price is current now. Okay, now you want to see a bullish candlestick flip. Oh no, we're not in the zone. Okay, cool. Never mind. We're not in the zone. We're not in the zone. We're not in the zone. Because we're in a higher time frame downtrend. We're in a higher time frame range right now. So when you're focusing on longs, let's say we're uptrending, but you were in a higher time frame downtrend, you want to wait for a valid high to be taken. My bad, a valid low. And you want to wait for a candlestick flip, but the candlestick flip has to be in a zone. Has to be. Because when we take that valid low, we're now in a downtrend. So you want that candlestick flip to happen in a highly probable area. Let's see what price does here. This is the area you want to see your candlestick flip in. Your bullish flip. You see that? Now you're going to wait for a pullback into the zone. Let's see what price does. Nice. Now I want to see the break of the S&D. And seems like we don't get that. That's cool. I'll just focus on sales now. So that's how you counter trend. Let me delete this shit. Do you close above it? Let me zoom in. No. S&D responsible is okay, cool. This is our zone, but we're still inside this. So yeah, okay, cool. So I'll stress it again. You don't want to take a move like this. You want to wait for this valid low to be taken first, and then get in the move, the manipulation below it. So that can even be from this zone here. No, I did that wrong. From this zone here, the origin of this swing here. So let's see if it gives us a move like that. Other than that, we are currently uptrending. But yeah, because we're in a range, our rules of engagement is to wait for a valid low to be taken first. Because we're in a range and because we are in a higher time frame downtrend. Now, let's see. Did we get a close? I guess we got the close now. We'll just shift that there. So this is a valid zone to use. See a shift below this low, tap back in, probably to the 70 or some shit, and move back up with it. Until, okay, cool. You do this until a protected high is taken. Until a protected high is taken. Now you're in a higher time frame uptrend. So you got equal highs that usually take out both lows. So you're not using this. Now you just cancel out all these ideas here because you don't buy above weak lows. You don't buy above weak lows. This low is weak. until price shows you otherwise. I'll even show it to you guys real quick. Somewhere here. I know I've written it down. It's somewhere here. Yeah, there we go. If price fails to break above a valid high, then do not buy above the week low. Wait for the manipulation below the week low. And that's narrative right there. Let me remove this. I want to see a bullish flip in here. If not, then, equal highs take out both lows. That's just that playing out right now. But this is a range that we're in, so we're at the extreme of the range. So it's always possible for price to move back inside. Just like that. Just like that. Now, let's see what price does. If we break structure, I've missed it, which we just did. Never mind this move. But you guys see where I'm coming from now. This is how you anticipate that counter trend move. So that move already happened. I missed that. Mm, I'm gonna wait. So I'm gonna start talking about shorts now because the only reason I was even talking about longs is because we were at the bottom of the range, and you don't want to short at the bottom of the range. So what I was waiting for is that this price action here, no high was taken yet. So it's still the same thing the on the short side. Once we are in, so look, check it. I'm gonna read this out because it's in here. It's in here. If price is in a higher time frame downtrend, right, and closes above the last up candle, then price is currently uptrending in a higher time frame range. Wait for price to trade above a valid high. So if price is in a higher time frame downtrend and closes above the last up candle, so the last up candle, wait, what? Where's that up candle, yo? This is that up candle here. You see that? There. Then price is currently uptrending in a higher time frame range. Wait for price to trade above a valid high. This is your valid high. If price breaks above a valid high, then price is currently distributing. Wait for a bearish candlestick flip within the 30, 50, and 70. So you're counter trending right now. You're waiting until price takes something. Now it's trading within a highly probable area. And now you're waiting for price to show you that it's shifted trend and it's ready to, you look for your manipulation move now. So that's how you engage with shorts in this type of environment here. But geez, yo, I'm starting to feel impatient. Gee, I'm trying to get in an entry, and it's this exact type of feeling where that leads to losses if you let it overcome you. You feel me? So don't let it. Be patient. Oh shit. Hold on. I think I just missed it. So I'm gonna chill and see exactly what I'm seeing. Okay, cool. I didn't miss nothing. See, so I need to wait for a pullback. Remember, pull back into the wick. The pullback is, well, it already happened there, but I had a closure above it. So you're waiting for another. In fact, no, you're not. Uh, Told you guys, you're waiting for a protected high. So prior, I told you that this was a protected high. This high was created when it created this low, came back in, and then broke out of the range. The valid high at the origin is a protected high. Now, what do you see? You see that the higher time frame trend has shifted. Currently, the current one, it shifted. Now price is going up. Your higher time frame swing is your directional bias. Let me see what going on there. Okay, cool. Now we are literally ranging between two areas, and I'm gonna refine this real quick. So this is the origin of the move. We took something, we tap into we already tapped into the 70 on the higher time frame. When we refine it to the origin, we tap the 30 and we shift away. Now the current trend is bearish. I'm looking for a move here. But in a ranging environment, when price is ranging, you want to place your long positions at the bottom, your short positions at the top. Let me refine this area too. In fact, that's the origin of the move there. So now price is in the middle of the range. And I'm going to show you guys, if the opportunity presents itself, I'll show you guys how to trade in the middle of the range too. And it's literally just by following the current trend. That's all. This is the current trend. Currently uptrending. Because the immediate, so how do I explain this? Let me actually organize my thoughts real quick. Okay, cool. It didn't give me an opportunity to show you guys how to trade in the middle of the range, but just know it's possible. But you first need to be profitable trading the extremes. Get this down first. So yeah, that's just more advanced. I'll get onto that when you guys, when I see you guys actually learning how you can trade these extremes, properly. Then I'll introduce that to you guys. But for now, I'm just gonna focus. Take a valid low. Where are we? We have this origin here. We have a 4 candle dump, so we want to take that second confirmation. So look, 2 to 3 swings and you usually get a reversal. So 2 to 3 on a reversal and you usually see a reverse. So this is a higher time frame pullback. So it's a higher time frame reversal. We see 2 to 3. This is the initial break. Told you guys don't count that. And that's what you usually see. So you guys don't really see me count my, I can't lie, it's pretty much intuitive at this point. That's something that, you guys should be doing consciously, and soon it will become subconscious and unconscious. Um, we could see an early move here. I see a candlestick flip here. We already have a low taken, a valid low. In fact, this was a whole protected low, gee. Right. Now I want to see a candlestick flip here happen. Okay, cool. Be careful now. On the 1 minute, it doesn't show on the 15 second, but that's why it's important to have the 1 minute. You know, you can view the 1 minute too. What do you see? 1, 2, 3, 4. So we see a higher time frame dump. So that first confirmation that you see above this candle. Now, on the 1 minute, I do include the wicks. I'll be real. On the 1 minute, it's I use the wicks, but on the 15 and 5, I don't. So in this thing right here, you want to see a body closure above and sweep it. Now, so this, I hate this, but this is a channel. Now, I say I hate it, but there's really nothing wrong with it. I just used to lose so much from this. I used to lose so much because check it. The mistake I made was this is a valid low. We take it. I see my confirmation. I try and get in a move back in. I get stopped out. I see we take a low right there. We see my confirmation. I try and get in a move back up. I get stopped out. That's what a channel does. So you want to be you want to let me put this on do not disturb, bro. Yeah, yeah. When this happens, so what I usually do when price does this is that I wait for a valid high to be taken first. So not a valid high, my bad, a protected high. When I see that we're in a channel, it's a protected high. It's a protected high that I must see taken first. So other than that, I'm shorting. Because the only reason I'd be anticipating longs is because of this area to the left here, but don't pay less attention to that and more attention to the right side. Last up candle. I want to see price pullback. Okay, cool, never mind. You have date of that. I want to see the S&D break. Ooh, pullback. Oh, you left. Oh, wow. Oh, no, no, no. Fuck. Oh, fuck. Fuck's sake. I was too slow. Fuck, man. Look, so that was the S&D responsible for the break. Now, this, so that's the break of the S&D responsible, but the up move started here. So we see price tap into it, and I was, just wasn't there. It was so quick, but look, just look at the move. Shit is crazy. So yeah, pay attention to the right side. Pay attention to the current trend. Um, hold on. Oh my days, bro. Trying to figure this shit out. I'm gonna end the session right here. It's a lot of information that I gave you guys. I think I only took like two trades, but fuck it. This is not a session about trades. These backtesting sessions are really more about price action, learning how price moves, learning how to engage with it. That's what these backtesting sessions are really about. To really increase your understanding. I'm explaining my thought process on why. It's really just why I'm doing what I do, why I do what I do. It's really about that. And I hope you guys enjoyed this session here. Uh, I hope you guys, I know for a fact that showing you guys what the execution looks like as well, you know, will help you. I remember when you feel, so what I recommend you guys to do now, especially if you don't have access to the seconds chart, have the 15-minute on your left side, the 5 minute on your right side, and on your execution, have the 1 minute there, and you'll be you'll be able to see the same analysis in which I'm seeing. You'll be able to analyze the same way I'm analyzing and see the same things I'm seeing. Hope you guys enjoyed this video and take care.